Hello everyone, and welcome to this demonstration of Cashflow Plus. Today we are going to take you through a 4-week cash forecast built in NetSuite using your actual NetSuite data. We're going to show you how to add custom dates for both customer and supplier invoices and see their impact on the cash flow. We're going to view the impacts of approved purchase orders, sales orders, and expense claims on your cash flow. And we're going to account for one-off and recurring receipts and payments, including revenue forecasts. So when you load the first page of the cash flow, the first thing that you'll notice is there's a drop down with subsidiaries. Those subsidiaries, or the cash flow I should say, is specific per subsidiary, and that is because bank accounts in NetSuite are always shown per subsidiary. What you'll notice, so therefore depending on which subsidiary you select, the cash flow will be reflective for that subsidiary only. You'll notice that the starting date of the cash flow is today's date because we're running the cash flow obviously now. So it's always the day that you're running the cash flow. And the starting balance is the sum of your bank accounts for that subsidiary in NetSuite. You'll also notice that there are some foreign currency bank accounts. Those foreign currency bank accounts are converted into the base currency for that subsidiary on the day that you're running the cash flow. So in this case, US dollars is converted into Australian dollars for today. You'll also see that we've taken into account undeposited funds. So any amount in undeposited funds will make the opening balance. This is a graphical representation of certain transactions from your NetSuite account. And those transactions are made up by this table below. So in the table below, you can see that we've got the starting balance. We've also got, it's broken down because the cash flow is a 28-day cash flow. And there is also a 90-day cash flow available. In this case, we're looking at the 28-day cash flow. It is broken down into seven-day buckets. And the cash flow is made up of accounts receivable. So those are all your customer invoices. And the default date for those customer invoices to appear in the cash flow is your due date on the invoices. That is the same with your accounts payable, your bills, and your approved expenses. So any approved expense reports with the due date on it will appear in the cash flow. We also have the ability to add in something called committed inflow and committed outflow. Those committed inflow and committed outflow items could be, for example, committed inflow could be forecast revenue that you want to bring in at a specific date, could be government grants. Committed outflow could for example, be salaries and wages. So if your salaries and wages aren't made up by any of the transactions above, it could be salaries and wages, GST, superannuation, or any other once-off amounts or recurring amounts that you want to show. And I'm going to show you a bit later on how we can add those in and how we can break them out per the cash flow as well. The sum of all of those gives us your net cash movement. And that net cash movement is because everything is committed. We do have the ability as well to add in estimated movements. And those are done through your approved sales orders, estimated inflow. So same with committed, we can choose to rather make it an estimated inflow, approved purchase orders, and an estimated outflow, which works the same way as the inflow. That is summed to give you estimated cash movement, and that gives us the forecast estimated cash balance. And that is the balance that you see in the graphical representation of your cash flow. To go through the individual components of how that is made up, if we click on the Invoices Due tab, that could give you a sum of all your invoices, of all the customers that have outstanding amounts. It's not per invoice. In order to click through per invoice, and it's broken down into the same date ranges, in order to click through to the invoices, you click on the View tab, and that will take you directly to the actual specific invoices. And on the actual invoices, we can override the due date with what we call the estimated due date. Because we know with customers, often customers will call you, or you may call your customers to chase a payment. And this is due on the 14th of August, but they've told us it's only going to be paid on the 20th. So therefore, if you do put an estimated due date into this column, this is the date that the cash flow will be based on. However, if you are accounts receivable and you are phoning your actual specific customers to chase those customers to find out when those payments are going to be made, you can actually enter that due date on your actual invoices as well. So if you have any saved searches or any accounts receivable reports that you're using, and you go to the invoice, you do not have to go through the cash flow to update the date. Once that date has been updated, it will then update the cash flow automatically. That date can be updated through mass updates, through imports, or any other smarts that you build within the system. We do have a couple other fantastic ways to update your due dates automatically. So what you'll notice, I've gone to the customer record, and under the customer record, under the cash flow tab, the terms are set to net 30. So terms are set to net 30, which means if we don't do anything, automatically it will be 30 days after raising the invoices when it will appear. However, we've also asked the system to calculate the average payment days, in this case that being 35. So this customer Tesla takes 35 days to pay us their customer invoices. We've then got what's called the cash flow due date offset. That can either be automatic or manual. And what that does is, if we make it automatic, based on the average payment days of 35, it will calculate that the average payment days are greater than the terms we have in our invoice. Therefore, for every invoice from this customer, it should be adjusted by 5 days in the cash flow. That means every invoice, without doing anything, will automatically be in the cash flow 35 days. It does not impact your receivables ledger. Your receivables ledger is still at net 30. This is only for the cash flow. We could manually change that. So if you go, we know this customer doesn't pay 35 days anymore, they now pay 45 days due to whatever reason, we could change this to be 10 or 15, to be whatever suits you. If we move back to the cash flow, you'll notice that the bill screen looks exactly the same, and we can click through on that bill screen to go directly to the list of the supplier invoices as well. I'm just going to close so there's your list of the supplier invoices, which we had, which was very similar to the customer invoices. And once again, when we click through, we'll have exactly the same fields. Expenses is the same. If there are approved expense reports, they will automatically appear in the cash flow. One of the items we never discussed was credit cards. So what you'll notice when we're looking at the cash flow balance is that there's a credit card amount. Now, we know that credit cards aren't necessarily cash movements. However, the clearing of those credit cards, i.e. the paying of those credit cards off, are cash movements. And that is why we have a tab with credit cards. It shows the amount that's outstanding. And then it also gives you the opportunity to enter an amount as to when that cash flow is going to be, when that is going to be paid. And for that is being paid in August, and we've got $5,000. Any sales orders that are approved will appear in the cash flow as well. You'll notice that not all of them are here. And that is because on a sales order, you have to, as long as they're approved and you put an estimated receipt date or payment date, then they'll appear on the sales orders and they'll appear for the purchase orders. If you don't put a date, and because you don't want to include them in the cash flow, then they won't appear here. And the sales orders and the purchase orders, as I showed earlier, will appear as under the estimated balance tab. If we go to the forecast tab, that is where we have the ability to enter once-off or recurring amounts that aren't reflected by any of the transaction types. And as you'll see here, I've added government grants, I've added salaries and wages. And this is where I was talking about that you can add committed versus non-committed. So with grants at the moment, that is an inflow and that is not committed. But I can add that to committed, and that will now appear, instead of being on the estimated inflow under the non-committed, it will appear under the committed tab. What I can also do though, is instead of the salaries and wages amounts, where at the moment they're just showing in an amount called committed outflow, I want those to show separately. So I click show in forecast. You can also add in any account types if you wanted. They do not do any posting. You add the description, you add the date, you add the amount, the inflow or outflow type. Is it inflow outflow? The recurrence, you can add as long as so this can go off into perpetuity. And you can also add the recurrence of this. So is that monthly, 12, and it's going to repeat every month. This table is a custom record, so therefore it can be imported to. So we can have your budgets or your forecasts, and they can be imported into this table. Therefore, any future revenue or future expenses can be taken into account as well. I'm now going to save that to show you the impact of the change that I made by showing cash flow. And once that saves, we're going to update the cash flow, or the cash flow is automatically going to be updated. You can see that the forecast is being updated at the moment. And in a moment, once that has updated, you can now see that we've got committed outflow is broken down into salaries and wages and superannuation. So you can really have this as large or as small and compact as you want. I want to look at one scenario just before I close out this demonstration. And we'll notice in this forecast that around day 14, we've only got $156,000 left in our bank account. And we know we've got salaries due around that stage. So that's really is a concern. We also know, because we decided to check with them, that one of our larger customers with an outstanding invoice has just said to us they're only going to be able to pay us at the start of September. So if we update the cash flow with the start of September for that balance, and we then go back to the cash flow to see the impact, you can automatically see that we have a dip in revenue, or a dip in cash, I should say, and we're not going to be able to make salaries. So what we may now want to do is take a look at our supplier invoices, and we know we've got some big bills being paid in that same period, and we actually think, well, hang on a sec, maybe we should go and we should delay one of our larger payments. Let's delay this payment until 16th of September. We'll have to speak nicely to that supplier and ask them if we can pay them late. And we'll see the impact that is going to have on our cash flow. Now that is being updated, but we will notice that the cash balance is going to move so that we can actually, and there we go. You'll now notice, just by manipulating your payment dates, what impact that has on your cash flow, and whether we're going to have any peaks and troughs, and whether we can actually make payments. So that is really the benefit of Cashflow Plus. So to summarize, I've shown you a graphical representation of your cash flow, giving you real-time cash implications of delayed debtors and supplier payments. You can see the impact of approved purchase orders, sales orders, and approved expense claims in your cash flow. You can account for one-off and recurring receipts and payment, including forecasts. Vendor prepayments, credit memos, customer deposits are being added soon. So watch the space, because you'll see them appear in the same place for the other parts in the cash flow do. If you like what you've seen, please reach out to us at info@onlineone.com.au. More than happy to send you pricing information and to give you further information of our cash flow. So that is info@onlineone.com.au. Thank you very much for your time.